Why am I being so selective? Let me walk you through my rubric for what's worth buying in this treacherous moment. First, I want stocks that don't need a trade deal to go higher because I don't know if we're going to get a trade deal or not. As these talks with China drag on with endless contradictory leaks on both sides, the list of casualties grows longer and longer. Earlier this week, we spoke to David Farr, a longtime CEO of Emerson Electric, knows more than all of us. I think he might be willing to break up the business, literally split it in half, unlock value. I love breakups. They tend to be fabulous for shareholders. But does that mean you can just go buy the stock of Emerson? Not so fast. See, Farr's been a visionary. And how do you tell that? Because he built a gigantic presence in China before everybody else, because the Chinese market was the huge source of growth in the world. Unfortunately, he didn't predict, as did no one else, the full extent of President Trump's trade war. So now Emerson's got a problem. There's not much Emerson can do about it other than hope things will blow over, or the Chinese economy won't be hit too hard, or the Communist Party won't expropriate their factories to strengthen their bargaining position. I mean, who wants that kind of risk? Not me. Sadly, this great American company's stock has become too binary. It's a deal or no deal situation. And that makes the stock too difficult to own, even those I'd love to tell you 3% yield, good balance sheet, far, you know. Then there's Cisco, the CSCO. In August, they reported a shortfall. And even though China's only roughly about 3% of their business, maybe a little less, it played a very negative role in the shortfall. Cisco got hammered again today. Goldman Sachs bought a whole downgrade. But even though the stock's become incredibly cheap, how do we know the numbers are done coming down? You can't know. Nobody knows where this trade war might go next. Look, here's a good one. 2 days ago, NVIDIA, not my dog, but my dog, he ate a whole bag of gummies last night. Can you believe it? Had to take him to the vet, up all night, the white, whatever. The stock plummeted 7 points 2 days ago because our government decided to crack down on technologies that China might use for facial recognition to help perpetuate human rights abuses. Who knows if NVIDIA's technology is even used there for that? It didn't matter, though. Nobody saw that coming. No more than my wife did with those CBD gummies that she keeps feeding him because it makes him so he can jump up on the bed. He couldn't get up before. All right, think about what happened with Apple, okay? What would have occurred? What would have occurred to this, if they hadn't pulled this app that the Hong Kong protesters were using to track the locations of the police? Apple's policy is first do no harm. It was enabling protesters to target police, so it had to go. But you have to wonder, right? You have to wonder if China will still punish Apple for even having the site up to begin with. I mean, think about what they're doing with the NBA, right? So what if you're a retailer that lacks the clout of the larger players, like Watch, my acronym for Walmart, Amazon, Target, Costco, and Home Depot? What if you can't switch your supply chain fast enough to avoid the next round of tariff increases scheduled for next week? When I was flipping through the S&P, a huge number of stocks were exposed to at least one or more of these flashpoints. My next test. Well, ask yourself if you're looking at a company that's going to be disrupted by competitors who are playing with free money or a superior technology. The other day, we spoke with Rich Allison. I don't know if you saw it. He's terrific CEO of Domino's. And he talked about how the third-party delivery services are willing to lose big money to partner with competitors. Domino's may have the best food delivery system on the planet, but they can't compete with free. I mean, they can't compete, at least with these platforms that are willing to lose money on every order. These same venture capital-funded competitors are why the stock of Grubhub is only a couple of points from its 52-week low.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.